2025 has definitely turned out to be a very tumultuous year for Canada. The high amount of uncertainty that we have seen in the real estate market, but also politics, with the parliament being put on hold and now Mark Carney taking position. And as if all of this internally was not enough, we are now at trade war with US, and even China is in the mix. Before we get started, hey guys, it's Iyer, your Calgary Realtor with eXp Brokerage and the Getty Team right here in Calgary, Alberta. This is a channel to help you stay ahead of the market by taking a closer look at all the market data that is publicly available, but also other data that I find from behind the scenes. And this helps you stay as a very informed buyer, seller, or investor in the Calgary real estate market. If you are looking to make a move in the Calgary real estate market over the next 1 year, it is extremely important that you reach out early because, as you will see in this video, there are different times for different types of buyers and sellers depending on what product type you're looking for and depending how the market is reacting to everything that's happening across Canada and the global economy. You can find my contact details in the description below. It is extremely easy to get in touch with me. It's a single link. You just book a call and there's absolutely no obligations. I look forward to having that call with you so that I can understand what your short, mid, and long-term goals are, and we can set you up for success in 2025 in the Calgary real estate market. Now, to get into the video, this report, I intentionally made it in the middle of the month because it's going to be very different from what we've done before. The market report that came out at the start of March has already been outdated because a lot of the data has changed dramatically, and that will only reflect in April's market data, which will come out in 10 days. But by watching this video, you can stay ahead of the game and know what to expect getting into April. And so this video will go over a few brief points from the market report that came out at the start of March, but then we will highlight the significant changes that have happened over the past 2 weeks and what you need to do differently as a buyer, seller, or investor today in the Calgary real estate market. Before we get into the exact market stats and data, let's take a look at the different factors that's going to affect the Calgary real estate market going forward. Some of them are less important than they were a couple months ago, and now we have certain new concerns affecting the market. So of course, the very first factor is market sentiment. Where is the buyer sentiment been right now over the past 1 month? 2 weeks ago, I made a video talking about how there's a short window of opportunity for buyers to take advantage of the tariffs on the Calgary real estate market. The reason for that is because the seller sentiment was entering extreme panic. A lot of people commented on that video with just a complete doom and gloom scenario, and that's just generally what happens in times like these. That is the exact sentiment that I was trying to talk about, because that sentiment was clearly reflected on the seller side whilst panicked sellers were trying to enter the market and offload their properties before they got into the spring market. And in the same time, even the buyers were panicking and trying to stay on the sidelines because they did not want to participate in a market that had this level of uncertainty. That created a clear gap of opportunity for barely 2 or 3 weeks. Let's say now being 20th March, you at most maybe can go up till 27th March to expect this in the market. Essentially, what we saw was buyers lowballing offers across the board. In fact, most properties in the last 2 weeks actually sold 20,000 to 30,000 below list price. And I've even seen entire duplex properties sell for 80 to 90,000 below list price. But since there were also so many buyers that didn't really take advantage of this opportunity, now we have a lot of sellers and new listings sitting on the market, and that is not good for sellers. The thing that I said 2 weeks ago turned out to be completely true, where buyers had an extremely amazing opportunity and still do for the next 1 week. You just put a whole bunch of lowball offers. If you don't get it, you can always buy a property later. This window of panic and opportunity will not come back again. At that exact time, what I told sellers was, do not list your property right now. Hold off. Wait for the spring market or wait for the pre-spring market. Instead, a lot of sellers still decided to list their property, and now most sellers are just sitting on the market with no showings and no offers. That brings me to my next point, the tariffs. How exactly is that playing out? We did have some tariffs take effect on metals on March 12th. In addition to this, we also have some additional tariffs coming to take effect on April 2nd. In the time that all of this was announced, China also decided to attack us with a trade war and tariff our canola oil and some other products. All of this because we tariffed their EV vehicles back in October last year. On the grand scale, it's hard to tell what we can expect going forward. Trump keeps changing his word, his percentages, and the products that he wants to tariff. And at the same time, it's just becoming a giant pissing contest between different countries. They're bringing out old issues, and now even the EU is involved, with China involved. And it's just going to become this giant ball of uncertainty that all countries have to go through. The OECD also came out and predicted their significant impact that they're going to see on all countries going forward. Everyone's going to suffer. There's really no winner here. So even though there's a lot of conversations in coffee shops still about tariffs, I would say it's taking lesser and lesser of a weight on people's everyday decisions. And so that's where that window of 2 to 3 weeks of sheer panic is going to close in. And then people are going to just decide to move on with their lives and do what they have to do. But that is going to change how sellers come on the market, because now we're going to have a lot more listings than we did in the last 2 and 3 years, and we're going to see this in the graphs as we go forward. The next factor that potentially has an influence on the Calgary real estate market is the rate cuts. We did get a 25 basis point rate cut in March. The other next rate cut is supposed to be in April. But given that we saw a huge spike in inflation this month, there is high amount of uncertainty whether the Bank of Canada is even going to cut interest rates anymore going forward, because it is very hard to predict what's happening in the economy and what the direct impact of the tariffs are going to be. Chances are they will just hold off, not do any interest rate cuts or hikes, and just wait and see how it all plays out in the economy. As part of the dust settling, the other thing that really needs to be taken care of is the elections. So of course, Mark Carney is now the leader of the Liberal Party, and there's also rumors that they're going to host early elections towards the end of April. Funny turn of events. The moment Mark Carney took office, Liberal Party's polls actually shot up, so much so that they've actually overtaken Conservatives at this point. It'll be interesting to see if it's actually Liberals or Conservatives that's going to come into play. And depending on that, obviously the policies are going to be very, very different, even though Mark Carney has just been blindly stealing all the initiatives that Pierre Poilievre announced as part of his campaign and making it part of something that the Liberal Party is going to do anyway going forward. Next point of concern for Calgary real estate market is housing affordability and costs. Calgary still remains one of the more affordable lifestyles available across Canada. The property prices have definitely gone up dramatically in the last 2 or 3 years, but when we compare it to major cities like GTA, Toronto, and Vancouver, still extremely affordable, and a lot of opportunities still available for people looking to move here. However, in the same amount of time now that we have tariffs taking effect, is going to put pressure on building prices, because materials used for construction are going to go up. All the lumber, the metal bars, and everything that we get processed through US are going to go up, and because of that, housing construction costs are expected to go up in the near future. Obviously, new construction and resale properties are very closely related in any given market, and as new construction prices also start going up, the resale properties will catch up behind, and so overall the entire market is expected to go up as a consequence of this. And now the final factor that's going to potentially influence the Calgary real estate market is the big word recession. Recession has started creeping back up. All reports across different media outlets now predicting Canada is definitely going to go into recession in 2025 and 2026, and they have reforecasted our GDP to be significantly lower than what it was before. And this has been happening together with when inflation ticked back up over the past 1 month, far beyond what the expected forecast was. So when we get high amounts of inflation like that and recession fears, there's 2 main things that can potentially get impacted, and it's the real estate market of Canada or the loonie. Now, in a situation where one of them has to become the sacrificial lamb to save the economy, which one do you think the government's going to pick? And this is not the first time we've been at this crossroad. The last and closest example to this was during the times of COVID, when businesses were shut down, put under undue pressure, which we are seeing happen now for a lot of small businesses across Canada. What did they do? They printed money. They print stimulus to try and help these businesses survive the economy. And they stimulate the economy so that it does not enter a recession. But the reason for that is so that the housing market doesn't crash, because majority of Canada's GDP is dependent on the housing market. So instead of allowing the housing market to crash, the loonie is going to be the sacrificial lamb, which means your currency is going to get devalued, and holding cash in hand is going to get lesser and lesser over time. And therefore, what happens when the dollar value gets devalued? without a serious recession in the economy. Your asset prices are going to go up. And it's not because that asset is necessarily worth more, but it's because your dollar is worth less. And that's also what we saw happening during COVID times when there was mass hysteria and panic on the streets. Nobody wanted to participate in the market. The market started picking up in a radical frenzy of people trying to buy homes. Then after that, resulting in an extremely high amount of price increase. And this is a relationship between money and assets that people don't necessarily get or understand. And that's why they miss out on most times. Assets, whether stocks, equities, or real estate, are generally really good hedges against the devaluation of your dollar. So overall, to summarize all the factors that's affecting the Calgary real estate market and how you should behave and what I think is going to happen going forward and how you should react to the market, right now, like I said, over the next 10 days, still a great window of opportunity for buyers looking to just snag a deal. Of course, you're not committed to buy right now, but nothing's going to stop you from throwing out some lowball offers and take advantage of the panic in the streets. And of course, this doesn't mean that if you weren't planning to buy, now is the time to buy. This is targeted at people who were looking to buy in the next 1 or 2 months. Maybe take advantage of this week instead. And if you don't get something, you can keep shopping around, but don't miss out this window of opportunity because I have seen some great deals go through. Now, what's my advice to sellers? Sellers should still hold off. There's only one reason that you should start considering to list your property right now. If you have a property that is not very marketable, for example, if you have a 2-bedroom home where majority of the properties in that community are actually 3 bedrooms or finished basement or have garages and you don't have one, or if you're a 3-story detached, most people don't realize, but that's a disadvantage compared to a 2-story detached. So there are a lot of scenarios. If you're looking to sell, now might actually be the time to sell, because as we get more and more listings on the market and we enter mid-spring, you're going to have a lot of great competitive properties right next door to you, and then you're not going to have any showings. However, if you still get onto the market right now, we have enough time to market your property while there are not many properties on your street for sale, and you can avoid that. However, if you have a great property that is not backing onto a busy road or is not a 3-story detached, you have a garage, you have a finished basement, or best even you have a walkout basement suite, all of those properties, wait it out. You want to wait till about start of mid-spring, and we are going to catch the market at the peak. What would be my advice? For those looking to buy and sell within 2025, you should buy right now and sell later. Most buyer sellers do not realize that you can put anywhere between 3 to 4 months of a possession timeline, especially if the market is as troubled as it is right now. So what you can do is have the time on your hands to look for a great deal, lowball a property that you really like, and put a 3 to 4 month possession timeline on it. In that time, we can then prepare your property to sell. And that way, your property will sell before you're ready to take possession, but you would have gotten the interest rates of today, plus you would have gotten the deals of today, and you can always switch to a better rate if we see even more rate cuts down the line. Now, of course, these are only 3 key strategies, depending whether you're a buyer, seller, or buyer and seller, but depending on the property type that you have, depending on what your goals are, there might be so many more ways to go about this market. And do not take this market for granted like we did in the last 2 or 3 years. And this is my key stressing point. If you do not watch this video even beyond this point, this is what you need to take away. This is not a market where you can blindly put your property on market. This market is going to dramatically shift from week to week. And that's why the monthly market reports might not even be enough to keep you updated. And that's why I'll be trying to put out more videos bi-weekly or even every other week so that you understand what's happening in the market on an ongoing basis, how the various factors we discussed are going to change the market, because things are going to be very volatile going forward. But because of that, there's also going to be a lot of opportunities to take advantage of that you're going to reap the rewards of for years to come. Now, let's get started by taking a quick look at the initial stats that came up on the market report at the start of this month. We're only going to take a look at the price points and a few other things. And then we are going to delve into the data that I have on my spreadsheets that shows you what's happening this week and what you can expect getting into April. So as you can see here, the total residential price hit $587,600 at the start of the month, and that was a $4,600 increase. Property prices went up across the board. Detached went up by $9,700 to $760,000. Semi-detached is now at $683,000. Row is at $446,000, and apartments are at $334,000. How does this apply to different areas across Calgary? As you can see, north is at $555,000, northeast at $512,000, east is at $432,000 now, southeast is at $581,000, significant gains of $5,700. South is at $587,000 with gains of $7,100. West went down by $2,500 to $706,000. And Northwest saw the highest gains at $11,700, and they are now at $646,000. And City Center is at $589,000. So what are the various factors that have affected the demand and supply for this month? Our sales was at 1,721, which is up from 1,451 last month. As far as our new listings go, our new listings did not increase all that much, and this is where you will see why March mid-month data is significantly different than what you saw at the start of the month. So new listings was at 2,830, which is actually a little down compared to the month before, which was at 2,896. And now you will see how this has exploded. As far as inventory goes, we are at 4,145, and that was an increase from last month, which was at 3,639. So overall inventory still went up, sales went up a little bit, but the new listings didn't go up all that much. But that is data from March 1st. All of that together resulted in a months of supply of 2.4 months. And what that means is that if no new homes came on the market anymore, it would take 2.5 months or 2.4 months for all the inventory from the market to go. And that actually dropped. So it shows a tighter market because it was at 2.51 the month before, and now it was at 2.41 at the start of March. And it shows that the market's getting tighter. There's lesser listings, lesser inventory. But what we actually saw happen then after that point is a dramatic shift. And that's why we're going to get into that data now. So now right here in this graph, you can see what I'm talking about. This is a bar graph that represents the active listings on a per month basis for the last 12 months, along with the sale numbers for each month. So as you can see, the sales was slowly increasing between December, Jan, and Feb of this year. And then all of a sudden, we see a dramatic downside. As far as the active listings, which is the total inventory being sold in that month, even that kept going every single month and kept increasing through March. So while new listings dramatically improved and inventory improved in March, sales went the other way. Let's take a look at this as a line graph, and it becomes even more obvious what I'm talking about. So right here, you can see the green line is the active listings. All the way between Feb and March, that line continued straight up. And those are all the panic sellers. People that were planning to sell, maybe not now, maybe in the next 1 or 2 months, trying to offload their property right now because they're afraid of a market crash. But they do not have the knowledge or the understanding of the macroeconomics and how things are going to happen and play out in Calgary different from other provinces. And unfortunately, a lot of them came on market and now just sitting there. And what happened in the exact same time for sales? Sales actually plummeted down. Sales was way worse in March than even December, which is like seasonally low point. How then does this dramatic shift or deviation between sales and new listings result in what's going to be the market sentiment going forward? And here is why you will see two things: why the buyers have an opportunity right now to lowball offers, and why sellers should not be on market right now. So let's take a look at the months of inventory for total residential across all property types for Calgary. And this graph, I had to verify it multiple times to make sure it wasn't wrong, because that's how surprising it is. So now if you take a look at the total months of inventory, you can see the months of inventory was around 2.4 towards the end of Feb. But now when we pull the data mid-March, you can see what has happened. It's almost at 4. And we have never in a single month seen such a high shift in months of inventory. This actually takes Calgary back to 2020 levels of months of inventory. So going from 2.4 to 4 in a single month is going to have a dramatic shift on the pricing and the lowball offers that I'm telling you. When that realization happens, sellers will now stay off the market if they do not need to price their property right now, because they will realize that they will lose a lot of money. But that is also, again, if they have good understanding of where the market's at. If they panic, then you're going to see more listings, and this might get worse. But I'm hoping more buyers can enter the market right now and take advantage of this. So let's break this down by different property types and see if it's any different. So if you take a look at apartments, which is one of the worst properties to try and sell right now because of the high amounts of inventory that we already have, your starting point was around 3, and now the months of inventory for apartments is closer to 5. As far as townhomes go, your months of inventory last time was somewhere between 2 and 2.5, so about 2.5. And now we are at 3.5. So again, even townhomes has seen a huge jump in the months of inventory. What's going to happen with semi-detached properties? Semi-detached properties, the months of inventory was around 2, and now that has dramatically shifted up to 4 months of inventory. And finally, detached property is it was at 2.25, and now that even that has dramatically shifted up to 3.5. So right now, most markets are already in a very balanced market. So anything above 2.5 to about 3.54 is a balanced market, and then above that you got a buyer's market. Now we have to wait and see how this all plays out, but that huge spike in months of inventory, what is the key opportunity that I was talking about for the last 2 or 3 weeks, is that if you absolutely have to buy a property in the next 1 or 2 months, now is a good time to try and lowball some offers and try to get some good deals. If not, then you can wait for this to play out and see where it takes you, and then try to find a good property after that. And that's why, even for sellers, this is not a market you want to enter just yet. You'll be competing against all those properties on the market. And what's going to happen is even though you have a really good property on hand and you do deserve a better pricing, you're just going to get lost in the crowd with the amount of properties around you. And so now is actually a better time for properties that wouldn't otherwise sell very well, that have some problems. And if you're not sure, definitely reach out. We can assess your property and put you on a timeline for when in the spring market's a good time for you to go online. And that will help you get the max dollar that you can for your property in this given market. So as we can see here, this is just to take a look at where the sales are actually happening in the market and how that compares to the last 6 years. Right now, majority of the sales are all happening between that sweet 500 to 700,000 range, because you can still get detached homes with illegal basement suites, and that then helps you have a mortgage helper during these tough times, but get you your maximum value without being stuck for the entire mortgage. Or there's even investors in that bracket looking for entire detached homes, because something that we've seen happen in the market now over the last 1 year, because of the high amount of increase in prices, but with rentals coming down a little bit, it's become a little harder to cash flow on investment properties on the lower end. So apartments and townhomes, unless you add value to the property, it's harder to cash flow, just because the prices are higher, the rents are lower. But when you get into multifamily properties with multiple suites, such as semi-detached or detached with a legal basement or illegal basement suite, it's a lot easier to cash flow, and that way it gives you peace of mind whether the one suite is your primary residence or whether you're looking to invest in the property overall. I hope you're enjoying the video so far and has provided you valuable insight that I don't think anyone else is talking about just yet. And this will put you in a position of having advantage on the market and being ahead and know what to expect when you go to see those homes or when you put offers. You can be one step ahead and have confidence in every action that you do in this given market. Something that I really want to call out, and this took me a long time to learn myself after years of investing experience, both in the stock market, bonds, and now real estate, is you need to really take emotions out of the factor. You need to have a very clear mind and very reasonable understanding of where the market's at, what the data is showing you, and be able to make a decision that is not driven by fear or panic. Panic and greed are both extremely negative emotions to have for investing or even just making a purchase as big as this, and always puts you at a huge disadvantage because then you're just reacting with the market instead of reacting at the market, because then you will just end up making the same decision that everyone else is. And generally, when your barber or butcher is telling you about how they made so much money or lost so much money, those are the two people you don't want to listen to. What I'm trying to say is, when everyone's talking about a single thing and it's already become a widespread sentiment or emotion, you need to take a step back and analyze the macro scenario. What's going to happen mid and long term going forward, and what are the opportunities lying right in front of you that you're not seeing because you're blinded through the lenses of how people are reacting to any given situation. There will always be something and a reason to not invest your money. And this is not at all to tell you that everyone should buy or sell now. There's a different time for everyone. What I am saying, though, is when you're looking to invest or when you're looking to buy or sell your property, you need to take an objective approach to it, because especially if it is a home that you're going to live in, or if it's a home you're going to sell that you've lived in a long time, there's a lot of emotional sentiment attached to it. But then at the same time, to overwhelm you with the fear of the market, that is just a terrible scenario to make a decision from. And therefore, reach out. My links are in the description. It's very easy to book a call. You will be able to get a call within a day or two, and we will get onto 1 hour Zoom call. I'll go through your entire scenario and advise you what I think best suits what you should do in this market. And then beyond that point, there is no obligation. And whenever you do need help, I'll be there to help you through your process. And thanks for staying tuned, and I'll see you guys in the next video.